Well, good evening. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for what we had in a strong day, as you can see behind me. Stock indices certainly up. And we knew that yesterday as we were talking in the wrap-up that you had beaten Meta and Microsoft, and they were up about 6% each, and that would take the market when it opened, and it's pretty much what happened. You had sort of a flip on that, where Amazon and Apple reported, and not as stellar. Stock indices tonight in the early trade are lower. Tomorrow we're going to get this. You're going to get the farm payrolls data. The market is looking on this report for 133,000 jobs compared to the jobs in March of 228,000. So not quite a 50% reduction, but very close to it, obviously. And you are looking here at a jobless rate that's expected to hold. We'll see. You know, with that loss, I don't know what it does there. Average hourly earnings up 0.3, and factory order data is going to come out Friday. But we saw today a bunch of numbers out of factories, and they were not good. We are seeing the order numbers plunge, the sales. People are scared. You've got to pay attention to all this. You know, from the United States, if you want to order for the Christmas season, anything from China, it's got to be done before June to get here. But with a 145% tariff, I think you've got to be looking elsewhere. The problem is everything you're going to buy looks like it's going to be tariffed. The question is how big and how much. Nothing's quite as bad as China. And the good news is today that China and the United States, at least, the U.S. reached out and they are talking. So at what levels, I don't know. I'm not privy to it. But the fact that they're talking is a good sign for you, for me, for everybody included in this. So just keep that in the back of your mind. Now, the big question is for everyone. You know, people are obviously bullish again. Everybody's saying that April 7th was the low of the market. It was a panic low. Okay, does that mean you just go zooming up right now? I have my doubts about that. Have you seen one tariff deal done? Didn't we just hear Monday, Lutnick coming out, our Secretary of Commerce? We are just waiting for the country, the Prime Minister, to give us the okay to announce it. Well, it's now 4 or 5 days later. Is there a deal? I mean, he spilled the beans. Where is it? Is it a memorandum of understanding? Is it a trade deal? Is it set the guideposts, if you will, for what other deals should be doing? We don't have enough data. So we keep getting these pieces, and you know they don't give us enough of what they are. Are these good deals, bad deals? Well, the market's going to react to all that, and I think you realize that. I'm very aggravated that I missed Carvana the other day. It's up $20 from where we were looking at it. But you are adding a little bit. Amazon up. It lost something in the aftermarket. We'll see if it stays like that later. Dell still looking okay here at the 91 level. Not okay in AMC, although I do understand Thunderbolts is the best of that movie, Jenner, that Rotten Tomatoes loves it. So let's hope that that helps it, because we all want theaters to do well. You know, it's important. They just built a new one in a suburb of Chicago that literally wraps around you. So I've never seen anything like that. There's a couple in the country. You know, you got to try things. I remember when IMAX came out, and the first ones I saw, my jaw dropped. They were exciting. Uber, just sort of sitting here, down 12 cents today. The auto companies, a mixed bag. While GM was down, they don't produce as much American-made as Ford does. Ford was able to hold on to some of this. And Boeing's just hung in here at the 182 level. And you should be understanding what Intel's doing. Intel is at the early stages of trying to get its footing. It's not ready, in my opinion, to break out in an uptrend at all. I wanted to bring this up, and I want to ask a favor of you. What do you want me to cover tomorrow for the weekend? So write me on this YouTube channel. Tell me what you'd like me to cover, and I'll consider that. Fair enough. But I expected this market to hang in here. It did. It didn't go for the lows since the numbers came out for the quarterly, and that's a good thing. But the pattern, you'll say, well, Ira, you're making higher lows. You're right, but you're making lower highs. You're not trending. You're just spinning around in here for the moment. Where's it doing it? Do you disagree that it's at the 18-day average? And how often do you hear me say here, markets like to hang around that number and from there decide what they're going to do. You'll see that. You saw it back here. It hung around it. You saw it right here. It hung around it. And that's from there is where it often makes that decision. If it breaks down, then maybe you're going back to the 1826 level. If it can go up, the 100-day average should be more resistance at 21.22. Momentum-wise, you came up, you did not get overbought, you're just hanging here right now. It's easier to get a sell signal if the market gets underneath now 1955 and get down there. Traders will probably have a stop over today's high. In O'Reilly, they were able to hold on to their gains. So we do have a market with a lower and low, higher high. It is not trending. It too is spinning around in this area, not quite on the 18-day average, but it spent a lot of time right here. Home Depot, the same thing. Spinning at that 18-day average, you lift your head and you really don't go anywhere and you're instantly overbought. I don't see anything that I like at this point. Google, higher lows, higher highs, overbought. And 4 days ago, it hit its upside target. So I'd be cautious right here. You really need the jobs data to give the market a goosing, in my opinion, for this to go. It is overbought, not really in love with it here. Netflix is still very powerful. At any point, it could add another level to the upside. As long as it keeps the embedded reading and it's not over that number, the sideways action could still continue to be bullish. Robinhood, I watched today in amazement. First off, when the market came out with the earnings yesterday, the market fell. Then the market started looking and it loved everything that it saw, and you went up and you made a new high. And by day's end, you caught all these traders as you closed just off the lows of the day on a $5 range. My work has nothing to do. It lost its bullish embedded reading. I happen to think before you take out today's high, the odds strongly favor you're going to come back to the combination of the 100-day average in green and the 18-day average, but I'm just not seeing anything to do in that market. I must say I am not in the bull camp on the energies, and I question if the market's not going to see short sellers hit the market if you get under 104.15, not today's low, yesterday's. I see a market that rallied, came back to the 18-day average, momentum's turning down in it, and if you get under that price, why not here? OPEC is meeting this coming week. Today, President Trump put on a secondary round of tariffs on Iran. First off, the meeting between Iran and our representatives not going forward at this point. There isn't even one scheduled, as I understand it. Basically, I think it comes down to Iran doesn't want to give up its weapons grade enrichment program. I didn't say they've made yet the uranium for it. I don't know. But the fact that they don't want to give that up to make a deal tells you they want to make it. It's either you want to make it or you don't. If you have no intent of making it, what do you care? You've broken the treaties before anyways. So if they're going to fight this battle, what President Trump said, fine. He got frustrated. And he said any country that does business with Iran, any country, and they buy oil or petrochemicals from them, the U.S. will not do business with that country. That's a pretty strong statement. Now, you know China's going to buy from them. Does he mean it for China? If he does, he goes the next route. And he says the Chinese banks that facilitate those out of the SWIFT system. That would get everybody's attention. I don't think he'll do it, but that's the other thing he could do. In stocks, okay, you couldn't even make it to the Bollinger Band. You stalled here. Be cautious here, all right? We have never gotten what I call a clear, hey, go in this market. The market had that one big rally, and it sort of, I didn't say the word fizzle, because it hasn't fizzled, but it just ran out of momentum so far. And it's a market that, if we look at where the slow stochastics are, they're both over 80 on the close today. Yesterday they were over 80, but the day before they weren't. So you've got to be able to hold that tomorrow if you're going to get that word embedding, and we'll talk about that if it occurs. In XLF, the financial services, I can still see the market trying to make its run for the 100-day and the upper Bollinger Band, but I don't think it's going anywhere beyond that. So I'd be very cautious. Obviously, you're trying to get your embedded reading here too. Day one was, let's call it backwards. Day 3, 2, 1, you're embedded. So that's why I'm saying I think it can get up there. I think the pros will buy breaks, maybe even the 200-day average. I think they're in the bull camp until you lose with the red line closing under 79. You always have to have an exit point for that. XLI in the industrial sector, right on up to the resistance, fully embedded reading. I would not buy into Bollinger Bands, but you can do that. XLE hanging here. Be careful. If you take out yesterday, Wednesday's lows, you can get a full-fledged sell signal as the market's overbought. Momentum is now starting to turn down. And if price turns down, you can go to the lower band again. And as I was talking about oil before, OPEC has its meeting coming up on the 5th. Are they going to increase production? If they do, anything in the energy sector starts questionable. In the gold market, you finally fell back to the 18-day average I was looking for. Remember, we'd been talking about it. You had lost the bullish embedded reading. Well, it finally did take place. Silver, back to the 18-day average to fight a battle. Copper, you lost the bullish embedded reading. So now this market might be saying it wants to get back, especially if it stays like this tomorrow, to the 18-day average and regroup at that number. In BND, you didn't quite get up to the bands here, but if you looked at the 10-year, the 2-year note, they all went to the Bollinger Band and had big reversals. So yield was falling, and then it came back the other way. This can turn on a dime tomorrow off the jobs report. I know you realize that. So we've got to see what it does and how the market wants to react to it. You know, people will say, is this going to bring the Fed out in June? That report, it guarantees it. Well, it would certainly do a lot to get it there if the number were a surprise, probably under 100,000 jobs. I think everybody's eyes would open. But 133,000 is built in, even though it's half of what the March number was. In the dollar, I was expecting a bear market rally. You had lost the bearish embedded reading. You've got it. Now the game starts. Was that it or not? And you fell in the euro right back to its 18-day average. Game on. Do these markets now find support at these numbers? We'll talk about this and a heck of a lot more at 9 in the morning in my subscriber videos, and I'll do it in the morning's video as well. But if you trade stocks, spiders, futures, you want to get those videos in the morning. It's where I'm able to say, buy here, sell there, do this, here's your stop, here's your objective. I don't have to say, this is what I think the pros are doing and talk in more generic terms, which that's what I think they're doing. But I'm a pro too, and I'll tell you what I think you should be doing, which is different. All right. If you look at the top here, you'll see a circle. Give that a click, and that'll take you to a link. From that link, just click it, takes you in so you can learn how to do all this for yourself and get onto those videos with me. And remember, what markets you want me to cover tomorrow. I'm Ira. You have yourself a great